Good morning, good evening, good afternoon from wherever you are. This is a price action review of Euro USD. Today is Thursday, October 23rd, 2025. We want to look at what price has done in the recent past now and what it is likely to do. So we are starting off in the daily time frame. Actually, let's start with the weekly time frame. Weekly time frame, you can see price opened here, right? Price opens there, new week open, and then drops. So it formed a very tiny wick and then dropped. If you understand about the open high low close and open low high close, it is based around that idea. So this is Monday. Price opens, goes up and drops right there, right? So with that in mind, we want to have this look at what price did in the previous week or last week and even the other week. You can see we have a fair value gap here, and then with this fair value gap, we had price coming to it, rejecting below it and dropping, and as a result we had this engulfing pattern forming, showing the intention to respect this fair value gap. So this engulfing pattern gives us a dealing range, and you can see price came, dropped lower, and then came to the premium side of this dealing range, giving us a reaction and dropping. So you want to see what happened in the 4-hour time frame, exactly where price was coming to at this point. So we have this change in state of delivery right here, and you can see price touched it and then dropped, right? We would have also looked at this one as price coming to the premium side and dropping, but now that is in the previous week, considering that price got to this point and then reversed. Anyway, with that in mind, we have this reaction of this change in state of delivery in the 4-hour time frame, and this change in state of delivery is in tandem with this fair value gap right here. You can see that. So this 4-hour fair value gap, this 4-hour change in state of delivery within the same zone, it gives us something meaningful to work with. And you can see price came, rejected from this 4-hour fair value gap and dropped, right? At this point, actually you would have taken an entry there, but then now this is during last week's price action. You can consider taking an entry there for a swing trader and hold this trade up to this relative equal lows right here, right? So, and this would give you probably a 11.53 R, or stop loss above this high right here, and that will be a 5.28 R. But you can see this is almost zero drawdown entry, what people call sniper entry. Anyway, so that was last week. If you're a swing trader, you would have taken that and held this move up to this point right here. But now you're trading the new week open or new day open. You can consider taking the new day open because price opens here, forms a high, and then drops. This was a perfect new day open to trade on this day. Or you also can consider it as a new week open, right? So with that in mind, we already have a bearish bias. Now that price has opened and dropped, now you want to look for entries that will support your Monday dropping lower. So 15-minute time frame, look for a reason why price would want to continue lower. So opens right here, Actually the opening was here. This is the opening, but if you consider Monday's price action, we would have taken our opening maybe around here. Now this is where Monday opened, so price opens, goes up and then drops, and now you want to have a reason why price will now give you an expansion lower or keep going lower. We already have a bearish bias according to our analysis from the higher time frame. So you can see we have that break of structure, break of structure, break of structure, and then price did not go above this point. Instead it came and gave us a market structure shift at this point. Now with this market structure shift in place, this price is supporting, this market structure shift is supporting our idea that this movement, this move right here is going to be the high of Monday, open, form a high and then drop to form a low and then close. So this, we are assuming this is the this is the what? This is, you are assuming this is the high of Monday, and once price drops lower like this, lower than the opening price, then we assume automatically price is going to keep going lower. So that is a combination of the new day open, the model I've talked about before on this channel, and combining it with the ICT 2022 model or fair value gap trading, or whichever way you want to look at it. Also you can look at it in the form of patterns, and I have also talked about this before. This looks like a head and shoulder pattern. I want to show you where is that thing, okay, so we are here. So this looks like a head and shoulder pattern. If you are a head and shoulder pattern, same thing. This is a shoulder, this is a head, and then a shoulder, and then drop, just like that. If you are a head and shoulder pattern, this is also for you. If you are an ICT 2022 model trader, this is also for you. If you looked at it probably in the 1 hour, I think you would have gotten a CRT. Let me check if that CRT is there. Yep, it is there. CRT model is also here. Look at this. A sweep of liquidity in the 1 hour time frame, price drops and closes within the range of this candle. So this is also supporting the idea that price is likely to go lower. Price is likely to go lower, right? So with that in mind, back to the 15-minute time frame. Now I want to show you how you would have engaged this price action and taken a ride on it in the form of a trade. So impulsive move to the downside, leaving us with a 15-minute fair value gap. You have this gap right here, and then the next thing you see is price comes into this fair value gap and gives us an engulfing candle to the downside, or a bearish engulfing pattern, and this pattern gives us a daily range. Again, a repetition of what we did in the higher time frame. Price will retrace into the 15-minute this in the premium side of this dealing range and then drop. So at this point, actually just want to take that entry. There's no need for, you can take what do we call, you can take you can go to the 5-minute and 1 minute to refine that entry, but there's no need for over analysis because it paralyzes your perspective of the market. So with this in mind, where have I taken my entry? At the premium side of this dealing range, stop loss just above this, at this high right here, because at this market structure shift, this is now a protected high. And now where do we place our targets? Now targets, where will we place these targets? Let's look at how we can place targets. So relative equal lows right there. These lows are actually targets as well, but we want to see what we can get. And then we have this, we have more lows, relative equal lows right here to take. And now you have your your Monday's trades would have ended up with maybe a 4.6 R. Monday's holding this from Monday up to Tuesday right here. So this was 4.6 R, 4.67 R. And if you're a strong trader, you're trading now the new week open. The new day open just applies to the new week. We are assuming the price is still going lower. You target these relative equal lows, and now that is how you hold this trade. So far it's almost like 50% into this into profits, and yeah, 8.88 for a week is not bad. So however, at this point, if you're managing your trades, you would have locked or placed your stop loss at break even at this point and just left the trade to run, or take partials and leave the rest of the trade to run. So that is how you would have engaged in the Euro USD trade. So assuming you are doing the new day open on Monday, how would we have engaged this? Let's see if you can go to the 5-minute time frame and engage for a scalping trade in the Monday's time frame, or Monday's, what do we call it, Mondays, so what you do in the 5-minute time frame, dealing range, look for a change in state of delivery up, and then change in state of delivery, though it is in the discount zone of this dealing range, so probably go to the 1-minute time frame and look for that change in state of delivery in the 1-minute time frame and see how you can engage. Right, so our change in state of delivery is at this point, up move then lower move. So CISD right there, once price comes to it, you also have this weekly candle here, that is a very good one. Once price comes to it, you take a trade there and stop loss above this 15-minute fair value gap, and this is just a trade you will take and hold on Monday only. You don't bother with taking the whole day, and that is respecting the new day open model that I've talked about previously. So targets will still be the same, I assume. Let's see where Monday closed. Monday closes at this point with a bit of consolidation. So Monday closing at that point, that would have been a good 3.78 R. Not a bad trade if you ask me. That means the Monday candle was not an expansion candle, but you still managed to get off something. So that is how you would have taken that entry. So Tuesday opens around where? Around here. Impulsive move to the upside. Actually, you can use the 15-minute time frame. And new day open on Tuesday. Let's see what happens. New day open on Tuesday. So Tuesday right there, up and then drop to the lower side. So this, we are assuming, is the high of Tuesday. Open, high, then move lower to form a low and then close. So as it moves lower, we are watching out for how price reacts off fair value gaps. So you can see fair value gap here, price didn't come back to it. Fair value gap here, price comes back to it, right? You can see that here, price coming back to it, and we have an engulfing pattern of this 15-minute fair value gap, and then This engulfing pattern will give you a dealing range and price coming to the discount or premium zone of this dealing range. We'll take an entry as price comes to the premium zone of this discount. Stop loss above this fair value gap, and then take profit towards the close of this Tuesday. And this is the new day open, so you can see it is close to 4.16 R. Yeah, so that is around when Tuesday closes, and you can see Tuesday gets to this point right here. Tuesday gets to this point right here to close, and then Wednesday opens right there, so then goes lower. So with that in mind, today is Thursday. Wednesday's price action did what it did, and then now we have Thursday price doing what it is doing. So this is 4.16, this is 3.78, this is close to 7.5 R Monday and Tuesday, right? So that is how you would have engaged in this price action of Euro USD. I intend to post more videos like this, and then with time probably we'll start doing live trading, or we'll start doing other things related to trading. Also, I am hoping to grow this channel enough to start hosting meaningful conversations around trading with other traders as well. Yeah, so until then, we'll just keep doing what we do, and of course wish you all of the best in trading, and till next time, bye bye.